In this video, I want to share with you 12 things that helped increase my agency's profit margins from 25% all the way up to 43% and how you can do it as well. Wait a second. Something doesn't feel right. There we go. I wanted to make this video after reading a report Promethean Research put out this year that shows that agencies of all sizes on average were reporting net profit margins between 13 and 18%. That came as a bit of a shock to me because for our margins to be that low, we'd be on track to grow revenue by 100 to 200% per year as a small company and at least 30 to 50% as a medium-sized company. Yet the average revenue growth they found of all sizes of agencies is between 5 and 17%. So I thought it would be worthwhile to share my thoughts on how agencies can increase their profit margins. Without further ado, let's get into it. The first and most obvious thing to do is to limit your expenses. Quite simply, the less money you spend, the more money you keep. Now, most of the points I'm going to make in this video do fall under the category of limit your expenses, but I wanted to talk about this more broadly at first. As your agency grows, so does the number of expenses you have, and at a certain point, your company's going to be big enough that you're not the only one with purchasing power. I recommend keeping a spreadsheet of every recurring expense that your agency has, and at least once a quarter, sift through your credit card and bank statements to see what's still billing you. Is there anything billing you that shouldn't be, or is there anything billing you that you just simply don't need? Basically, if it pays for itself, keep it, but if it doesn't, cancel it. You certainly don't want to cancel a piece of software that costs $500 a month, but that saves you $2,000 a month, but at the same time, you don't want to be paying $100 a month for a piece of software that you could do the same exact thing with a Google Sheet and a Zapier integration, or at least 95% of the same thing. The next thing to consider is what credit cards you use. The nearly 120 books behind me cost about $50. All my film gear retails for a little over $2,000, but I only had to spend about $700. Some credit cards offer great cash back in general or at specific retailers, and others have amazing perks on things like travel, all of which can either lower the cost of an expense or make it even completely free. Depending on your level of spending, this could save you hundreds to tens of thousands of dollars a year. And because this is money you're already spending, you might as well make the most of it. The next thing to do is to limit how much out of scope work you're doing. Any work you're doing that you're not getting paid for is just simply killing your margin. Before starting a project, make sure you're aware of what your client's expectations are for you and that you're setting your own expectations as to what you do, what you don't do, and how you handle anything that isn't within the scope. For existing clients who are used to you working out of scope, you may face some pushback trying to reel their expectations back in. Now, you might have noticed that I said limit out of scope work and not eliminate. Sometimes someone just needs help and they think of you as the best person to help them. And I would argue that it strengthens your relationship to do so. But it's a balance. Do they need a tracking pixel added to Google Tag Manager but they don't know how to do it themselves? Sure, let me help you with that. Do they want you to handle their email copy because, hey, you already write their blog posts? Sorry, we don't do that, but here's somebody who does. Now that you're only doing work that you're getting paid for, it's time to get paid more for it. And I know that increasing your pricing is something that you've been told to do a million times before, but sometimes it really just is as easy as increasing the number that you're putting on proposal. For every extra dollar you can charge without having to increase the scope of work is just pure profit. There's a lot of ways to approach increasing pricing, which is why I'm planning on making an entire video just dedicated to the different ways that you can increase your pricing. And this is the part of the video where I shamelessly plug myself and ask you to subscribe. But if you don't, I'm not gonna know.
Or will I?
And just like you can probably increase your pricing for the same scope of work, you can probably reduce your scope of work for the same pricing. This is really just a process of going through everything that you do and creating a matrix of impact and effort. Anything that is high effort and low impact, you should just eliminate it. And go deeper than just a task or a process, but every step within a task. If you have a 300-point audit, how many of those points are high effort and low impact? You may quickly find yourself only needing a 135-point audit. Once you've removed as much redundancy as you can work on automating what's left. Automation could be several videos in and of itself, and it probably will be at some point, but basically, automation allows you to do more for less cost and in less time. Automation comes in a lot of different shapes and sizes, but I would recommend getting started with Google Sheets. Create templates that'll automatically format and parse data for you and get really comfortable with functions like query, VLOOKUP, if statements, and using custom arrays. From there, it really depends on your needs. For example, you could combine Screaming Frog's command line interface with a VPS to run crawls on a schedule and export the results as CSVs. Then using the Google Drive API, you could send those CSVs to Google Sheets, automatically parse the data, and have Google Sheets talk to your project management system to create tasks for any action items, and then assign those tasks to the appropriate team members. Why is it so hard to say tasks? Tasks. It just feels wrong. Take every software you use and check to see if it has an API. If so, look at Zapier or Integromat to see what they can do for you automatically without needing to hire a developer. But also don't be afraid to hire a developer to build something custom for you, especially if you know exactly what it is that you need. Now that you've got the work that you're doing running super efficiently, you've made sure that you're only doing work that you're actually getting paid for, and you're actively working on increasing how much you're getting paid for that work, it's time to maximize the amount of value your agency is getting from the work that it's doing. And one of the ways that you can do that is by shopping your freelancers, vendors, and partners. If you're looking to hire a freelancer or a vendor, don't just hire the first one that you find, or even just only test 2 or 3. To give you some context, when we were looking to hire a landing page designer, we interviewed at least 20 different people, and of those 20, we decided to hire 8. Of the 8 that we hired for an initial project, we ended up hiring 3 of them again for an additional project to be able to test their consistency. And only after that second project did we make our decision as to who to hire. Yes, this is a lot more expensive up front, but it allowed us to find the perfect combination between value, cost, and turnaround time. Sometimes the best choice is a lower cost option than what you anticipated, which will save you money directly, and sometimes it's a more expensive option which will help you either make or save more money in the long run. Then once you start to develop relationships with your vendors and do more business with them as your own business grows, you start to carry more negotiating power. Talk to the businesses you work with to see if they offer bulk discounts or if you can have a special discount code or maybe even just faster turnaround times. You may be able to reduce your overall cost to complete a project by 5 to 15% and possibly speed up the timetable as well. It's really just as easy as asking, and if they say no, asking what you can do in order to get them to say yes. By leveraging these vendors to execute some of your workflow, you can grow more quickly by spending more of your time on sales and scaling. But it's going to be more expensive than doing that work in-house. You're going to be paying a hefty markup as you're paying for not just the salary of the person who's doing work for you, but you're also paying for the salary of the project manager, the account manager, the sales team, the CEO, payroll taxes, software, rent, insurance, lawyers, CPAs, and so on. And if they don't manage their expectations properly, you're the one who's going to be paying for their inefficiencies. So it may cost them $200 in salary after accounting for all their other expenses, as well as adding their own markup. It could end up costing you $500. And as your agency grows and you start to develop your brand, you'll probably want to start to take more control over your deliverables. This is where freelancers come in. You'll still be paying a markup, but a much lower one as their overall expenses aren't as involved as running an entire company. The freelancer may want $300 for their time and $350 once all their expenses are considered. Since you're working with someone directly, you'll need to factor in your management and software expenses, which let's just say that brings the cost up to $400, which still lowers your overall cost by about 20%. As your workload continues to increase, eventually it'll make sense to hire someone in-house to gain a lot more flexibility and control over how your business operates. Now what may cost you $100 in payroll could come out to $250 once the management, software, taxes, insurance, etc. expenses are factored in, cutting the overall cost by 50%. Reducing your expenses in all these different ways is definitely going to make an impact on your profit margins, but that assumes that you're scoping your projects properly. Just because you're efficient at the work that you do and you're managing to keep your costs low doesn't prevent you from pitching a project for $2,000 when it actually is going to require $4,000, and that can quickly kill your margins as well. You definitely shouldn't be making up a price when delivering your proposal. You need to have some sort of system in place to determine the costs associated with a project scope, so you're going to be a lot more likely to be able to hit your target profit margins. This is another topic for a video on its own, but at the very least, you should have a rough idea of what goes into your deliverables in terms of both time and resources. Using that understanding, you should be able to then get a pretty good idea of what the minimum you need to charge is in order to hit your target profit margins. Then once you've started building project plans, you need to track how well you're sticking to them and adjust them for projected costs on future projects. When you're looking at the profit of not just the entire agency, but at the individual client level as well, you can easily see what your most and least profitable clients are and try to replicate and avoid more of those in the future. And for clients that aren't as profitable as you planned, you may be able to make adjustments to the project plan in order to get them back on track, or just simply talk to them about increasing their budget. Now that you have all this extra money in the bank, you're going to want to have a cash flow management system in place. A cash flow management system keeps track of your money and helps ensure that you're hitting the margins that you want. Another shameless plug, but I already did an entire video walking you through how our cash flow management system works, how important it is, and how you can steal it as well. The card will be up on whatever side it is, still can't figure that out, and you can watch that if you want. Implementing these 12 things, tactics, whatever you want to call them, has allowed us to nearly double our profit margins, and I think they'll have a pretty big impact for you as well. If you think that I missed any critical ideas, or if you disagree with me, let me know down in the comments. And as always, if you liked this video, please share it with your friends, and if you didn't like this video, please share it with your enemies.